look at all these income sources that we've explained, rents, dividends, winning from Baba Ijebu, your salaries, your investments, your profits from your side hustle, we now deduct the reliefs. We have what we call the chargeable income. And the chargeable income will then be subjected to tax based on what you are seeing on the screen. So I know somebody put in the comment that the slides are not moving. It was deliberate. I wanted you to focus on this screen, right? So when you look at your chargeable income, let us say your chargeable income after you deduct all these reliefs is 500,000. The law says the first 800,000 is taxed at 0%, meaning because your chargeable income is less than 800,000, you will not pay any tax at all. Now, what the Nigerian Tax Act has done is to say that if you are a person who earns the minimum wage, and minimum wage in Nigeria is 70,000 naira. So if you earn 70,000 naira or less, you pay 0 naira as tax. 0. So they don't want a situation where those that are not earning enough are now still being asked to pay and pay and pay. Remember initially when I was telling you about tax, I was telling you that tax should be an equitable system, not equal, but equitable. So I'm seeing a question that's saying, will we get the recording? Yes, it's being streamed on the different LSETF platforms, and I believe including YouTube, so you can catch that at your own convenience. All right, so back to what I was saying. So equitable treatment is that everybody pays according to their capacity. So what we are saying is there are some people in our society that might not be well-to-do. Instead of burdening them with taxes, let those that have more than enough contribute to help, such that we pull them out and they can become large earners. And it is when they now have income, as the president has been saying it, we are not ready to tax the seed, but it is the fruits. So you take your seed, you grow it, the seed becomes a tree, the tree becomes a plantation, and it is when you now have fruits that you can now pay tax. And so if you earn minimum wage and below, it means that you will not pay taxes. Someone says if minimum wage is 70,000, that is 840,000, they will still pay some taxes. No, you don't pay any taxes once you're in the minimum wage. So as much as this tax ban is there, the law specifically exempts anybody any minimum wage. What it means is that if tomorrow the minimum wage increases to 250,000, that 250,000 person will still not pay tax. That's what the law has said. So it's very clear about the fact that if you're a minimum wage earner, you will not pay any taxes. Now, somebody is asking me to clarify the rent relief, and I'll take it again. Now, what the rent relief is saying is that, so take this note and pay attention closely. The relief you get for rent relief is the lower, meaning whichever one is lower, the lower of 500,000 naira and 20% of the rent you pay. So you put 500,000 on one side, you calculate 30% of the rent that you are paying. You put it on another side. You compare which of these two is lower, and the law would only give you the lower of the two of them as your rent relief. So let us imagine that your rent is 2 million naira, right? Remember I said put 500,000 on one side, your rent on the other side. 20% of 2 million is 400,000. In this case, 400,000 is lower than 500,000, right? The law says you take the lower of the two. So in this case, your rent relief will be 400,000. Now let's take another situation where maybe your rent is 5 million, right? 20% of 5 million is what? Is about 1 million naira, right? Now, 1 million naira is higher than 500,000. So we pick the lower of the two. In this case, your rent relief will be 500,000 naira. So I hope I've clarified that. Victoria and Oluseun and Ifeinwa Gabriel, I hope we've clarified that with respect to the rent relief. All right, excellent. So those that pay minimum wage are exempted. And based on where your income falls in this taxable, your chargeable income, it is how your taxes start being paid. Remember, I told you that the way the law is set up is that those who seem to have more money will pay more. So you see that the rate increases as the income increases. So if you're a person that is earning or has chargeable income of over 50 million, your tax rate is 25% compared to somebody whose taxable income is about 2.2 million, right? So the law is simply saying that if you have more or you have more capacity, please do us a favor and contribute more. You can afford it. It is easier for you to pay more than somebody who is earning less. Remember, I was still talking about the principle of equity versus equality. So we're not aiming for equality where everybody pays the same amount. We're aiming for equity where everybody contributes based on their capacity, right? So for individuals, this is the tax table that will be applied to you when it concerns the tax to be earned. Now, there are a number of exceptions here and there, and I'll just touch on one, which is on what we call capital gains. So remember I was telling you that sometimes when you invest in an asset, there are two reasons why you're investing in that asset. One is you want the asset to be paying you money. So if I buy a house, the two objectives that I have is that I want the value of the house to go up, and I also want to collect rental income from that house. If I buy shares, I want the value of the shares to go up, and I also want the shares to pay me dividends, right? So it means that there are two sources of income from that type of asset. There's the investment income that I get, and there's the increase in the value. That is what we call a capital gain or a chargeable gain. Now, in this instance, the law has provided for certain exemptions, meaning that if I invest in that type of asset and I sell it in a year, if this total sales proceeds, meaning the amount I got when I sold it, is less than 150 million, this is for shares now. If I bought shares and the total selling price of my shares is less than 150 million, and the gain I made from selling those shares is less than 10 million naira, I pay zero tax on those shares, provided I meet those two conditions, right? Another thing the law also provides for is that if you've bought shares and you've made a loss on those shares, before they determine whether you have made a gain or not, they have to consider the losses you have made before now. It is only on the net profits position that you pay tax if there's even any tax to pay. Also, if you sell your personal items, you sell your personal house where you were living, irrespective of the amount, it is tax-free, but you can only sell one house once in a lifetime. And you can sell up to 1 acre of personal property. So you have a house that is 1 acre that you've been living in and you decide to sell it. The gain you make from selling that house is totally exempt from taxes because it is a personal dwelling and it is less than 1 acre and you have not claimed that relief before in your life. You can only claim it once in your life. Also, if you sell your personal assets, your personal goods, and it is less than 5 million naira, it is tax-free. If you sell your personal vehicles, your car that you were driving, so you bought a Toyota Corolla for 2 million naira, and you now sold that Toyota Corolla for 4 million naira. That 2 million naira gain that you made is tax-free. Why is it tax-free? Because the law allows you to sell up to 2 vehicles a year. You can sell 2 personal vehicles a year and be exempted from tax, right? So those are some of the things that we need to be aware of when it comes to capital gains or chargeable gains. Another key thing that we need to clearly mention is that law now clearly includes crypto. So if you are investing in cryptocurrencies, Bitcoin, Ethereum, or any type of NFTs, they are included as, chargeable assets. So somebody's asking me to take capital gains again. And I'll take it one more time. But what we can also do is to collate our questions. We would have a question and answer session. What I'm trying to do is to make sure that this session is more interactive and we take more questions. So once I just wrap up these basics, we would actually open the floor for questions. Right. Now, it is clear that, cryptocurrency is taxable. Winnings from sport betting are also taxable. So it's very important for us to note all these changes in the new laws so that we know exactly, what it is that we should be complying with when we should be complying with them. Now, we've been talking a lot about individuals. Now, let's talk about companies. let us talk about companies. Now, if you have a company, remember that I told you that the company is different from you as the owner, right? So you have a company that has a different life from you. And remember that I said to you that the difference between a company and an enterprise or a business name is that it has the word LTD, limited, right? When you see PLC, it means that there are more than 20 shareholders. So it's also a type of limited liability company, but it's a public limited company. In that instance, the business is different from you as a person, right? Now, what type of income, what type of tax do you pay on your income as a company? If your income is less than, if your sales, your revenue, now what is revenue? Because people will ask, what is revenue? Is it my profit or is it the total value of goods that I sell? Turnover is the total value of goods that you sell. So you have a shop, you sell provisions. Your sales is the total value of provisions you sell, not the profit you make from selling those provisions. So if your total turnover is less than 100 million, the law provides that you pay 0% in income tax. You don't pay any tax at all. And I want to believe that will cover at least 80 to 90% of the people on this call. If you have a limited liability company and that company is doing business and the sales value is less than 100 million, your tax rate is 0%. Zero. Zero, zero, zero. If you are following me, I want you to go to the chat box and type 0%. If you are following me, exactly 0%. So if your company is doing sales of less than 100 million, your tax rate is 0%. Good, good, good. I can see people are following me. Now, if your tax rate is greater than, if your revenue is greater than 100 million, your tax rate will be 30%. Remember that I said that, if you have more money, the law is saying that if you have more money, you should try to pay more. And those that don't have enough should pay less. So what the government has done is to exempt small businesses. Say you are still small, you are still growing, don't pay any tax. When you grow big, grow big enough, you have created value, you are employing people, you can then start paying taxes. Also, these small businesses are exempted from charging VAT, meaning you should not bother yourself charging VAT on your supplies. So recently, when the law came into force, we saw a lot of business saying, oh, our prices have changed because I'm charging you VAT. That is only correct if the business is not a small business. But if it is a small business, that company has no business charging you VAT, because this same law also exempts them from charging VAT. The same way they are not expected to pay companies income tax, they are also not expected to charge VAT when they sell, right? I hope we're together. Now, it is important to note that the way the law is written is that this exemption from taxes is only for companies. It's 0% companies income tax rate. So it means that if you have a business and it is structured as a business name, you might not be able to get this incentive, because remember that businesses don't pay companies income, enterprises don't pay companies income tax. They pay personal income tax because you are seen as the same person as your business. But for companies, because the company has a different life from you, what the law provides is that the company's income tax rate for companies that are doing 100 million and less will be 0%. So if it is not a company, because you don't even pay companies income tax in the first place, right? You then do not pay, you are not going to be able to enjoy this. However, I'm aware that the state governments are working on some sort of presumptive tax regime, and we'll hear from the LRS guys later on the call. I understand that some of them are here to explain what might be done for businesses to see how they can mirror some of these advantages that companies are getting, to also have, business names get this. Now, somebody says, so restaurants adding VAT have been fooling us. If they are big businesses, they are right to charge you VAT. We just need to state that. So it is you that will, you might not know whether they're a big business or a small business. So it is the company who needs to, determine whether they are an agency that, a company that complies with the value added tax. Now, if you are not a small company, apart from the company's income tax of 30%, there's also what we call the development levy. Before now, we used to have the education tax, but now we have development levy. And the development levy is charged at 4%. I also need to add that as much as the company income tax rate is 30% for companies, there is a provision in the law where that rate can reduce to 25% once the president issues an executive order. So once the president and the governors under what we call the National Economic Council sit down and agree that we want to reduce this tax rate, the law provides for the rate to drop from 30% to 25%. But for now, we have not seen that order from the president, so the tax rate is still 30%. So as a company that is not a small company, you will pay 30% company's income tax plus a 4% development levy. However, when the president signs this order, the tax rate will drop to 25%. So right now, 30 plus 4, it will now become 29, 25 plus 4, right? Now, some people ask, how does Nigeria compare to other countries with respect to the tax rate? We have some advanced countries where their tax rate is as high as 40%, 45%. So Nigeria is still somewhat doing good and still somewhere, in the bottom half when it comes to these taxes. Now, we've talked about individuals and we've talked about companies. Now, the next question is, what if I am a partnership? So I am not a sole proprietor. I have a partner. I have a business partner. The question will be, how do you people organize your business? Did you organize your business as a business name or you organized it as a company? If you organize it as a company, it means that the company is separate from you. You people are just shareholders in the business. So that business would only pay you dividends when there's profit, right? Or pay you salaries if you are working in the business, or maybe pay you director's fees if you come and you coordinate the activities and you sit for board meetings, right? But if it's a business name, the same way an individual is taxed is the same way you'll be taxed as a partner in the business name. You'll be taxed as yourself. So it will be about how do you share profits in this partnership. If your share is 30%, your tax will be on 30% of the profit. If it is 50-50, your tax will be based on the 50% that you earn from that partnership. I hope that's clear. Now, in order to comply with all these things, and these are just the taxes on income tax, we still come to the other taxes that might need to be paid. It's important for us to talk about tax registration. For us to comply, remember we started talking about civic responsibility, the social contract, and all that. So just quickly, somebody says CIT 30% on revenue. It's 30% of profits, right? So it's important for us to play our own role, our civic responsibility and pay our own taxes. Now, to do that as responsible citizens, we need to register with the tax authorities. We need to go and register ourselves as individuals and our businesses. So for all of us on this chat, if you have a tax ID, can you go to the chat box and put, I have mine? I have mine. If you have a tax ID, put in the chat box, I have mine. Excellent. We have very compliant people. LRS can see us. We are very compliant citizens. Excellent, excellent, excellent. Right. So for those who don't have, LRS has even made our life very, very simple. I cannot speak for many other states, but I can speak for Lagos State. All you need to do is to go online, go to the website. It is etax.lirs.net, and the LIRS guys will still give us more information on that when this session ends. etax.lirs.net, and all you need to
Hello, Mr. Apaflo. We cannot hear you anymore. I think Mr. Apaflo has some network issues. So while we wait for him, I'm going to launch a poll on the screen now. Please kindly fill the poll. The poll has been launched on everybody's screen. Please kindly fill the poll on your screen while we wait for Mr. Apaflo to join back. I hope you can hear me clearly. Please kindly indicate that you can hear me clearly in the chat box. And please, there's a poll on your screen. Kindly fill the poll that's been launched on your screen. Thank you.
Apologies, please. I was shortly kicked off the call. My network had issues, but I'm back.
Welcome
So
back.
thank you. Thank you. In between, I'm seeing a quick tax 101 quiz. So
Yes.
please, if you can just quickly complete that quiz, we need LSETF to understand your profile, your business name, your gender, just provide a few information so that LSETF can know exactly how to help your business. They also want to know what local government you're based in, the type of business you're doing, the number of years you've been in business. As it was explained initially, LSETF is in the business of supporting businesses, right? Somebody saying they can't see the poll. I'm sure it will be displayed very soon again. You see the poll, just all you need to do is open your app. You soon see the poll, it will come up again. So LSETF is in the business of supporting businesses, and they can only do that if you give them accurate information on your business so that they know exactly how to help you. I want to say that, when COVID hit, one of the agencies that was really supporting supporting businesses to recover was the Lagos State Employment Trust Fund, and it deserved a lot of kudos for doing that. So let me just give us 1 minute to sort out the poll. You should be seeing it on your screen now, and we'll quickly sort that out. Now, before I got kicked off the meeting, we were talking about tax registration, and I was saying that companies will register with the Nigerian Revenue Service. So you need to first start by looking for the Nigerian Revenue Service that is closest to your business office. So it means that if you're in Agege, you need to look for the Nigerian Revenue Service that is close to you in Agege. If you are in Pangrove, you need to look for the one that is near to you in Pangrove. Now, how do you know this? You simply go to the website. You go to www.nrs.gov.ng. So www.nrs.gov.ng. That is the Nigerian Revenue Service website. And there's something called the tax office locator. It would help you know what tax office is close to you, and you can use that. Now, when you find that address, what you need to do is you need to write a letter to the NRS to say, I want to register my business. Now, what are the things you put in that letter? Of course, you put details of the name of the company, you put details of your address, you put details of the shareholders, you put the details of the directors. You tell them my business is into cassava processing. So the nature of the business, you state it there, right? You state the phone number of the business, you state the email address of the business. And then you attach your CAC documents to it. You attach your utility bill as your proof of address, and you also attach one director's ID. You take that along with your letter. Of course, you put the letter on your letterhead and you sign, and you take it to the Nigerian Revenue Service near to your office. And they'll use that information that you've submitted to generate your tax ID for you. Now, even though as a company, you don't pay taxes to Lagos State, you have a responsibility for your staff taxes. So as you create your business and you employ staff, the law says that as you are paying staff salaries, you are deducting their payee, right, which is the personal income tax on a monthly basis, and you are remitting it to the state in which they live. In this case, we use LIRS. So for you to also be able to make that remittance, you need to now go and register with LIRS. Not because you as a company will be paying taxes to LIRS, but because you need to remit the taxes you deduct from your staff, right? So you do that registration. Now, the beauty about both NRS and LRS is that after you register, everything you need to do with respect to compliance can be done. Both tax authorities have online platforms. You can seamlessly log in your username and password, and you can fill in all the details you need to make. You can make your payments online without even leaving the comfort of your home or your business. So they made it very seamless for you to comply with your taxes. Now, while you're making these registrations and doing the filing, it is important that you submit accurate information. So from the standpoint of being responsible citizens, there's also the part where the law has provisions for those who, provide false information. Some of those penalties can be really steep. And for us as businesses, we really like to avoid those penalties. Now, speaking of penalties, penalties really occur when you don't do what you are supposed to do when you are supposed to do them. So it means that for us to comply adequately, we need to understand what is our responsibility. What should I be filing, right? And when should I be filing? What is my deadline? How often should I be filing these returns? That's what we call the frequency, right? Now, there are a number of taxes that I said that are collected by NRS and the state IRS, in this instance, Lagos. We have not focused so much on VAT because we assume that a lot of the businesses here are small businesses and will be exempted from charging VAT. Somebody saying the audio is not so great. I hope it's better now. Okay, so we assume that a lot of the small businesses are exempted from charging VAT, right? But let's talk about VAT briefly. That's value-added tax. Value-added tax is the tax that is charged when you sell goods or services, right? When you sell goods or services, you charge value-added tax. Now, there are certain products that are exempted from VAT, which, you should not charge VAT on. For example, if you go and buy petroleum products, you buy AGO, that's diesel, or you buy petrol, PMS, you should not pay VAT. You will never see VAT on any of those products because the law specifically exempts those products from being subject to VAT. Same thing with LPG, that's gas, cooking gas. Another category is what we call zero rated, meaning this VAT on it is zero. Things like medical products. So if you go and buy, drugs, you buy medications, the tax rate, the VAT rate on those products will be zero. If you buy baby products, things for babies, should the rate on them should be zero. And there's a list of agricultural items. It should also be zero, right? Now, any other item that is not on the exempt list or is not zero rated, you're supposed to charge 7.5% VAT. Now, remember that I said that it is only businesses that are doing 100 million naira and above that are supposed to even be charging this 7.5% VAT in the first instance. So if your business is less than, is doing less than 100 million revenue a year, you should not even be charging that VAT. Now, when you charge the VAT, it is your responsibility to remit that VAT to the tax authority. And you must do that before the 21st of the next month. Meaning if I charge my customers VAT in January, I must remit it to the tax authority before 21st of February next month. And same way, the one for February must be remitted to the tax authority before 21st of March the next month. And so and so forth. So it has to be, it has to be VAT like that for each month remitted and filed before 21st of the next month. Now, just a couple of things when it comes to VAT. There's also what we call input VAT. So there are two VATs. There's a VAT that you charge when you are selling, which as a small business, you shouldn't charge when you're selling. And there's a VAT that people charge you, right? That is what you pay. It's called input VAT. You charge that, so the one that you charge when you're selling is called output. The one that people charge you when you're buying things is called input, right? Or maybe when you are doing business with banks, you transfer money from bank A to B, they charge you 50 naira transfer fee, and on top of that 50 naira, they charge you 7.5% VAT of 3.75 naira. Now, those VATs that you pay when you are buying items, the law also makes provision for you to recover those VAT. It makes provision for you to recover that VAT when you are buying your own things. It's what we call input VAT, right? So it's important for us to take note of the fact that you can reclaim the one that you charge. You can reclaim the one that is charged to you when you're buying things, and you can net it off whatever you charge when you are selling. So if I charge my customers 10 naira, but when I was buying the product that I sold to them, I paid 5 naira. What I'll pay to the government is 10 minus 5, and what I pay is 5 naira. And that 5 naira goes to the Nigerian Revenue Service, because the Nigerian Revenue Service is the authority that collects value-added tax. I hope we're clear. Now, there's the issue of payee. Payee is just simply personal income tax, but it is pay as you earn, meaning as you are paying your employees every month, you are deducting and you are remitting that to the tax authority. So it's made every month. So when you deduct taxes from your staff salary, you're supposed to remit it before the 10th day of the next month. So any tax you deduct in January must be remitted before 10th of February. Any tax you deduct in February must be remitted before 10th of March, and so on and so forth. Now, for withholding taxes, withholding tax is what we call an advanced form of payment of tax that you should deduct when you are dealing with vendors. Once again, the law has exempted small businesses that if your company is a small business, you don't need to pay. You have no business deducting withholding tax from anybody. They just want you to go ahead, do your business, grow your business, and it is when you grow your business, you start worrying about everything that concerns taxes. So, but if you're a business that's larger than 25 million, when you are doing business with other entities, you are required to deduct a percentage of that invoice. Sometimes it's 5, sometimes it's 10, sometimes it's 15, depending on what the type of service is, right? And remit it to the tax authority. Now, that money you remit is still for the person you deducted it from, but that person will use it at the end of the year when he's filing his own tax returns. Same thing for you as a company. When you do business with other companies, sometimes they deduct withholding tax from your money. That withholding tax they deducted from you is also for you. They will pay it to the tax authorities, and at the end of the year, when you are filing your own tax returns, you can use that credit, the withholding tax that have been deducted in advance, to now offset whatever you are supposed to pay. So it's simply an advanced form of payment of tax. So let's say my tax for a year is 2 million naira, but I have withholding tax that people have deducted from me 1.8 million. It means at the end of the year, what I just need to pay the government is 2 million minus 1.8, and I'll only be paying 200,000 because they've already collected 1.8 million in advance. So my tax is now 2 million minus the 1.8 paid in advance for me based on withholding tax. I now pay only 200,000 naira, right? Now, companies income tax. We talked about companies income tax extensively before. When should you file your company's income tax? You should file your company's income tax 6 months after your year ends. So if you're a company, you have to decide what we call the year end. The year end is the date at which you close your books and you say, let us look at how well we have done over the last 1 year. And it can be any date. It can be January, it can be February, it can be March, it can be August, it can be December. It can be 1st of January, it can be 15th, it can be 30th, it can be 31st. But for a lot of businesses, they like to use the last day of the year because it just helps them put everything into proper perspective. Now, so irrespective of the date you choose as your company's year end, your company's income tax returns are due 6 months from that date. So if my company year end is 31st December, it means that I have 6 months in the new year to prepare my accounts and file. So when we say file simply means you are submitting your returns. You are submitting to the tax authority, say, this is my business activity and this is how much tax is due. You have 6 months. So that means you have up to June 30, 2026 to file your company income tax returns. And of course, as an individual, whether you are working in employment or you are a business owner, you should file your own personal returns before 31st of March of the next year, because that is where you declare and say, okay, I made 10 million naira from employment income, but my POS business gave me another 2 million. I made 100,000 from rent, and this is my total income. And based on that, you now pay a particular amount of tax depending on what the income level is, right? So it's important for us to take note of that. So I'm wrapping up and we'll soon be entering the segment for questions, because I see the chat box and Q&A box is really hitting up with a lot of questions. And let's talk about, penalties for non-compliance. What are the penalties for non-compliance? First of all, anytime you are doing business with any vendor, make sure that they are a vendor that is registered for tax. So it means that on the documents they are giving you, whether it's invoice or receipt, you must see their tax ID there. Their tax identification number must be clearly written on it, because there's a 5 million naira penalty for doing business with anybody that does not have a tax ID. So please, let's take note. That's one of the big ones. Now, for late filings, if you don't file your CIT returns early, there's a penalty of 100,000 naira and 50,000 for subsequent defaults. And sometimes if you are proved to be doing tax fraud or doing tax evasion, it can be up to 3 years of imprisonment, depending on what the offense is. Now, how do we survive, and what strategies must we put up as business owners to be able to to handle our taxes very well? First of all is knowledge. So kudos to everybody who has come for this session. You have knowledge. If you are a business that is less than 100 million, you are not required to pay taxes, but you must still file your returns, right? Remember I said filing is simply telling the government, this is what I am doing, right? And these filings can happen online after you register. For LIRS, you go to www.etax.lirs.net. For the Nigerian Revenue Service, you go to www.nrs.gov.ng, right? And if you are not getting response on the portals, just make sure you go to the office. There's always somebody in the office to attend to you. So if you're a business that is doing 100 million and below, even though you're not required to pay taxes, you must still file your returns. You must tell the government that this is what I'm doing and I am less than 100 million. See evidence, and you submit, full stop. They won't charge you. But if you file late, they might not charge you for late filing. So please take it serious, file in time. Another thing is keeping documents. You must keep the receipts, because if for any reason the tax authorities ask you to explain, right, you must come with evidence. So you think about it, that the government is like your business partner. Imagine you invested in a business and somebody comes and says, I spent 100,000 naira on diesel. The next question you ask is, where is the evidence? It's the same way with government. You need to keep your receipts, you need to keep your invoices, and you need to keep those things for up to 6 years, because the government can ask for this information up to 6 years back. Another thing that can also help is that you ensure that all your transactions are done through your bank account. And if they are done through your bank account, you can simply put good narrations that help you remember what the transactions were for. So I've been seeing a lot of things about narration online, and narration is good, but narration alone is not sufficient. You still need the documents. Do you understand? Once again, think about it like the government is a business partner. Imagine you're a business partner, right? And somebody just puts narration and says, well, 1 million naira was spent on rent. It's not enough for the person to say it was spent. You say, where is the evidence, right? You want to see the receipts. You want to see the agreement. You want to be sure that this rent that he said was paid was for the same business that you invested in. And that's how you need to think about it. So the narrations are good, but please also keep the agreements, keep the receipts, keep the invoices, right? And then this agreement is important for us to also sign them. Don't just have agreement that is not signed. Sign these agreements. And as I've said, if you're a company, your business is different from you, please separate your company funds from your personal funds. It would save you from unnecessary explanations. And of course, the last point that I want to mention is that the new law has created what we call the tax ombuds, meaning they've created a body that if you think the tax authority is treating you unfairly and you don't have money to go and employ a tax consultant, you can simply go to the tax ombuds and say, tax ombuds, I have a problem. This is the problem. And they will come in and mediate between you and the tax authority and help you resolve the matter amicably. So that is the end of my initial presentation. And I think we'll just open up for some questions. I know there are Q&A. I don't know if the LSETF team can help me, collate those questions. Some people are making their comments in the Q and in the webinar chat. So if you're putting your questions in the webinar chat, I would advise you to please move to the Q&A. There's a question and answer session. There's a question and answer session. Rather, there's a question and answer segment where you can put your questions. In that segment, I am seeing 10 questions. And so I'll start taking some of the questions that I am seeing here. The first question I'm seeing.
Thank you, Mr.
Okay.
Apaflo. So I'll read the questions out for you so you don't have to go through that stress. The first question would be, I earn independently as a consultant, but I charge them for my workstation, fuel for my car, health insurance, pension, etc. However, I am paid the whole money cash. How do I protect myself from being taxed on my entire income? Is it wise to actually start paying pension and HMO from January? How do I remit and have them understand that the whole money is not salary?
Okay, so in this instance, right, you are allowed to, deduct whatever you pay as pension. So yes, please go ahead, make contributions to your retirement. According to the law, any contributions you make to your pension is tax-free. So please go ahead and do that. Same thing with HMO. Please go ahead because the law allows you to claim any deduction, any payments you make to for HMO and for pension as tax-free. So I hope that explains to you what you need to do. Thank you. Please, can we take the next question?
Okay, the next question would be, I am trying to buy a house with MREIF for 100 million, but the homeowner has said that I should instead make a down payment of 40 million and then pay the balance instrumentally. This is a great opportunity for me, actually, as I no longer have to pay the interest on the flip side. I have concerns. How do I get the money I'll be paying the homeowner as mortgage or rent relief?
Okay, so to answer this part, right, if you have your own home, the law has made another provision for you. Even if you might not get rent relief because you are not renting, if you are paying interest, so interest on loan, but it is owner occupied, meaning you are paying interest on a mortgage loan for a place where you are living, your primary residence, you are allowed to claim the interest as tax-free. So while you might not get the rent relief, you might even get something more, which is the interest on your owner occupied home. So the interest you pay on that MREIF loan is allowed to be deducted from your income before it is subject to tax. Thank you.
Next question would be, what about a business selling farm produce, like a home delivery or farm produce business?
So this question is not clear. So advise the person who asked this question to provide more clarity so that we know exactly what the person is asking for. You know, as it is, it's hard to understand when they say what about, is it what about CIT? So please, if you are the person that asked this question, kindly provide more clarity.
Okay, so the next question would be, how does one prove that the company is a small company?
Okay, so a company is a small company if your revenue is less than 100 million. So of course, how do you prove that? Your financial statements and your bank statements must also corroborate that story to show that, you know, look at my bank statements, look at my financial statements. Those two show the story, you know, to say that, yes, this is enough evidence to show that I am a small company. So I believe with those two, you'll be able to prove that you are a small company.
So the next question would be, but as a small business exempted from VAT, can you confirm if we can file nil filing?
Yes, please go ahead and file new. Since you are not expected to be charging VAT, you can go ahead and file new. But there might be some instances where some businesses, even though they are small businesses, might deliberately say they want to be charging VAT because of some of the benefits that it gives them. So yes, please go ahead and file. If you don't have any taxable transaction for the month, you can file. It's totally allowed by law. But just make sure that that is the truth. All the law says is tell us the truth. If it is zero, it is zero, and nobody will punish you for that.
Okay, the next question would be, if you are a business name and you do not have employees, do you file payee for yourself?
So as a business name, you know, as somebody who's doing business under a business name and you don't have employees, you really don't pay payee. You're under the direct assessment. The payee is mostly for employees. But if you know you have a problem saving money to pay your tax at the end of the year, it might make sense to be paying it small, small every month so that it's not a big amount when the year ends, right? But typically, when the year ends as a business owner, before 31st of March the next year, you are required to now, you know, tell the government that this is all the income I earned and this is the tax due, and you pay the tax due. So while you might not be required to do pay, you can do your personal income tax at the end of the year. But if you know that it's going to be a challenge for you to keep all your money and pay the tax at once when the time is done, it might make sense for you to be paying it small, small on a monthly basis.
Okay, the next question. If I am a civil servant already paying payee and also run a business under business name, do I need another tax ID?
Okay, so most likely your business name is going to have a tax ID with NRS and Lagos State because that business might employ staff, and depending on whether it's large or small, you might need to charge VAT. So the business name itself will still have its own tax ID, even though the income that the business name will earn will not be seen as different from your own income, right? But yes, the business name will need to get its own tax ID. So just as we've explained, you can register with the NRS, you can register with the LIRS and get the tax IDs for your business name.
Okay, the next question will be, I know last year it was that companies making 50 million and higher pay VAT and CIT, but now I see it's 100 million and higher. I made over 50 million last year, but not up to 100 million. Do I still need to pay for 2025?
Okay, so I need to clarify, right? Before January 1st, the threshold for small company was 25 million, not even 50 million. It was 25. So what the new law has done is it has increased it from 25 million to 100 million. So yes, there was a bit of a controversy about whether it's 50 million or 100 million because of how certain parts were drafted. But in the new law that have been regazetted by the National Assembly, it's clear that it's 100 million. So for last year, since the law was not yet in operation last year, the threshold is 25 million. So if your revenue was more than 25 million, as you're saying here, then you'll be subject to VAT, you'll be subject to CIT. However, from 2026, January 1st, because it is now less than 100 million, you will not need to pay those taxes, which is basically highlighting what the government has done. So if you are a small business, before now you would have been paying those taxes, but now they've increased the threshold to say If you're a small business, you shouldn't worry about these taxes. Just grow your business and we'll figure out the taxation later.
Okay, the next question will be, how about vendors like carpenters, plumbers, etc.? Does it mean we can't give them jobs if they don't have TIN, or must we remove WHT from them? Withholding tax.
Okay, so for vendors and carpenters and the likes, right? At a minimum,
Sorry.
it is very easy to register for a tax ID, right? So even if they don't have tax ID, as I've explained to you, it is as simple as going to the LRS website and they quickly put in their BVN, put in their NIN, and they generate a tax ID. And once they have that, they can write it, even if it's on a piece of paper where they are signing to write whatever they're doing, they state it there and you can do business with them. With respect to withholding taxes, if they are, depending on how they structure the organization, if they are individuals, you might want to charge the withholding tax if withholding tax is applicable. Bear in mind that because this tax is an advanced form of payment of tax, if at the end of the year, right, their income is less than minimum wage, they can write to the LRS to ask for a refund. Say people have already deducted withholding tax up to 50,000 on my money, but I didn't earn up to 800,000 in a year. So please give me my money back. See the evidence, see my bank statements. LRS will refund you that money. In fact, law provides for a percentage of the revenue collected to be saved in a particular pool for all these refunds. So if you deduct withholding tax, but at the end of the year, the carpenter or the plumber, right, has not earned enough income, the person can ask for a refund. Also, I'm aware that Lagos State is working on some sort of presumptive guidelines on how to treat some of all these low-wage jobs that would help. Thank you.
So the next question will be, for a company who has not filed CAT for 3 years, how is the penalty calculated? 50K every month or 50K yearly?
Okay, so the penalty is, we look at it for the first month of default and for subsequent months. So it is not a yearly figure, it is monthly. The penalty is looked at on a monthly basis, right? 50K for the first month and 25,000 for subsequent months after that. Okay, can we take the next question?
Okay, the next question would be, what is the difference from VAT and WHT?
Okay, VAT is a tax that is paid on goods and services, meaning when you sell, while WHT is an amount that you deduct when you are paying people, when you are doing services with them. Now, it is only businesses that can deduct withholding tax, right? If you're an individual, you're not supposed to be deducting withholding tax. So VAT is a tax when you sell on goods and services. Also, if you're an individual, you're not supposed to be charging VAT, right? You're not a taxable person as far as the VAT law is concerned. It's only enterprises and businesses that should be charging VAT. Withholding tax is an advanced form of payment of tax that is deducted on certain services when you are paying a vendor. So you need to find out what type of service it is. What does the law say the rates should be for the withholding tax? And when you make that deduction, you need to remit it on behalf of that vendor, and that vendor can then use the credit they've received at the end of the year. Thank you.
The next question is, how to get tax certificates for a LCC under 1 year?
Okay, so an LCC, I believe, is a limited liability company. All you need to do is to go to the Nigerian Revenue Service, where you must already have been registered. If you have not registered, the first thing to do is register. Then after that, you need to submit, sometimes they ask you for a statement of affairs. You also need to submit the evidence of your bank statement to show what you've been doing during the year and to show that, the VAT that you should have paid, you've been paying if you are supposed to pay. And once you do that, within 2 weeks or less, they would issue you a tax clearance.
Question would be, if I make between 20 to 25 million yearly, do I need to upgrade my business from business name to limited think that will be limited company.
Okay, so in this instance, right, it is important for us to understand that right now what the law clearly says is that companies, that's LTDs, right, that are doing 100 billion and below. So what it means is that that tax exemption is only for companies. So it means that if you're a business name, you might not enjoy that assumption. So yes, it might not be far-fetched to conclude that it might be better off to structure as a limited liability company. However, there are also things you need to be mindful of, that once you switch to a limited liability company, there are other compliance requirements that you need to have. You need to have a secretary, you need to have meetings, you need to keep certain statutory books of record. So it's important for you to know that, as you formalize your business, there are also other compliance requirements. While you might not be paying taxes, there are other compliance requirements that you need to pay attention to. And remember that because the business is different from you, if that business pays you a salary, your salary is still taxable because you are not the business. Thank you.
The next question will be, are we expected to pay tax for both LIRS or FIRS? Please, I need clarification.
Yeah, so I think it depends on what the taxes are. So the person might need to add more context to that.
The next question will be, I have two separate business enterprises. Can I upgrade one of them into an LLC and do the two businesses under that LLC?
I mean, I think we've sort of answered this already with the previous question. Yes, you can. You're free to explore that option if it makes sense for you.
Next question will be, please kindly enlighten us on why a section of the new tax law says professional services providers are exempted from the 100 million threshold of annual turnover and will have to pay tax, considering some of these companies are startups and just struggling to survive.
Okay, so in the conversations that I've heard from the chairman of the committee, what he said is that, the reason why professional service companies are exempted from that 100 million threshold is because as a professional, you understand the law, you can read, you have more understanding than the average citizen. So that complexity of filing your taxes doesn't exist for you. And so because of that, they deem that professionals will not get that exemption. So that for him, that's the thinking behind it, that professionals have the capacity to read, understand, and comply with the laws. So there's no need to exempt them.
The next question will be, companies that are enterprise, what amount of revenue will exempt them from paying tax?
Okay, so for companies that are enterprises, on the income tax, we don't have any threshold exemptions for enterprises. The only thing is that the 100 million threshold would, of course, apply to you with respect to VAT, but on the income tax, we don't have any threshold yet. LRS is working on something. Maybe the LRS guys will give us more context. But right now, for business names, there's no income tax threshold exemption, except the minimum tax threshold, rather the minimum wage threshold.
The next question would be, when I register my company with FIRS and they register me on Promax, I was made to pay VAT, even though my business was not making up to 2 million then. How do I resolve this with them in this new tax regime?
Okay, I'm sorry to hear that, but I think that there's also context around that. Maybe there were late penalties that you were being charged. It's also possible that maybe you yourself had charged the VAT. So I need us to be clear that even if you're a small business and you're not supposed to charge VAT, if you charge VAT, the law says you must remit that VAT that you charged. So I don't know all the details around it, but if you didn't charge VAT and you didn't, what you paid was not penalty for late remittance, you might want to write to the Nigerian Revenue Service to seek redress or a refund or see what can be done for you in this regard, because you shouldn't have paid VAT.
Next question. I doubt if small-scale business are exempted. I just did a transfer of 34,000 naira on MoneyPoint and I was charged VAT of 1.50. If my money got deducted from the source, how do I claim it when I file my returns, especially when I am a small-scale business owner?
Okay, so let's answer this matter. The VAT that you charge is because MoneyPoint was offering a service to you. Now, MoneyPoint is not a small business, right? So it means that they will charge VAT when they are serving you, right? Now, for you as a small business that has suffered this VAT, on a monthly basis, you can put together all the VAT that you suffered and say, okay, when I did business, they charged me 1 point, this 1 point, and claim a refund from the government, and the government will pay you. That's what the law actually provides for. So tally all these VAT that they are charging you on all these your expenses, and you can claim it back.
Okay. Next question. For a small business with turnover above 100 million, do I pay company income tax, and to which body, NRS or LIRS?
Okay, so if you are doing more than 100 million, the law doesn't see as a small business. And so if you are a limited company, you pay to NRS. If it is a business name or a partnership, you pay to the state IRS. And in this case, I believe it will be LIRS. Thank you.
Next question. Are there additional steps for paying taxes if you are a consultant getting paid in USD from different countries?
Okay, so as a consultant getting paid from different countries, the law provides for your global income to be taxed. So what you need to do is you yourself need to file your returns yourself and say, okay, this is the amount I made from country A, country B, country C, put it together, see where you fall on the tax table and remit the tax due. That is what is required from you. So yes, your income from multiple sources should be declared to the tax authority and you should pay tax. However, if you suffer tax in any other country, maybe you were getting paid from Italy, Italy had already deducted tax, the law provides for you to claim a credit on that, for that tax that you already suffered from a different country, filing your own. Thank you.
Okay. The next question would be, to claim the rent relief, do I need to notify NRS or it's automatic? As an employer of labor, what is the evidence of the amount to be deducted as rent relief?
Okay, so it's not an automatic relief. So evidence of relief will of course be the rental documents. We'll start with the agreement. You need to submit your rental agreement. And it has to sort of correspond with what you say is your place of residence. And of course, there should be evidence to show that you paid that rent. I believe those two documents should be evidence to prove that you're no, it is not.
So we can barely hear you.
Oh, okay. I said no. Relief is not automatic. It is not an automatic relief. It's not automatic. You need to have a copy of the rent agreement and evidence of payment. So those two would help you claim the rent relief.
Okay, the next question. If I use my name's initial to register a business, e.g., GAQ Globe or GAQ Group, will it stand as an enterprise or company?
Okay, so we've said this before. What differentiates an enterprise and a company is the fact that it has limited, LTD. If it doesn't have LTD, it is still an enterprise. So these two names that I'm seeing here don't have LTD. Although CSC will not even allow you to register group if you don't have companies under you. So I don't know if that group is the one that is limited, but if it doesn't have LTD after it, it is still a business name. Thank you.
Next question. I run a POS business alongside with my regular trading, and my inflow and outflow annually is over 100 million, but my interest is less than 500K. How do I pay tax, and how do the government agencies detect my worth?
Hello?
Hello, sir. Did you hear me?
Yes, I heard you. I heard you. I think you went off briefly. Okay,
Oh,
so in that instance, the most important thing is what income you're earning from these inflows and outflows. So the tax authorities will be interested in the net profit, whether how much profit you're making. It is on the profit that your income tax will be charged. All right, so they won't tax your inflow or your outflow. It is the profit from that POS business that will be taxed. Okay, I think we can go on to the next question.
okay. The next question. I registered my business last year, but I have not started selling yet. Hope I am exempted.
Yeah, so if you have not started business yet, you are exempted, but just make sure you notify the tax authorities that you are yet to commence business. And when you commence business, let them know that you have now started. Remember that tax is only for economic activity. So if you are not doing business, you have nothing to worry about. But remember that you must notify, communicate to say, CEO, I have not started. Do you understand? So it's important to still communicate to the tax authorities, whatever your situation is.
The next question. Where do you pay to?
Okay, so pay is paid to the states in which the staff lives. So if staff lives in Lagos, the pay goes to LIRS.
Please, can you say more about direct assessment? How does it work?
Okay, so direct assessment is simply at the end of you as the individual, you look at all your income from month and say, okay, this is the total income I've earned. Based on that, you calculate your tax payable and you then remit. That's all it is. It's just that for employees, their own tax is deducted monthly, pay. But for you as a business owner, you direct assessment. However, I need to add that even employees must direct assessment at the end of the year. Because you must go and say, okay, this is all my income. If all the income you have is fine, you might not have to pay additional tax. But you have other sources of income. You need to still declare it and pay taxes on it. So all you simply need to do is go to the NIS and click on the filing, see the year, you click on the year, and you fill in your income details, pay the tax due, and you'd have completed it. That's it.
Sir, we could not hear you. The audio was breaking. Can you please repeat the answer one more time?
Okay, so I said from multiple sources, and you will be good. That's it. Declare your income from multiple sources. Pay the tax due on that income, and you would have made your direct assessment filing. I hope that was clear.
It was still breaking. The audio was breaking.
Okay, I think my network is a bit spotty now. Okay, let's go to the next question. We have 21 more questions. Wow, that's about 50. Okay, let's see how many more we can take. We've answered 29 questions so far. We have 23 now. Okay, let's see how far we can go, because we still need to give some time for the LIS guys to speak. So I think we'll take this question and answer for the next 6 minutes. So let's see how many more questions we can take in 6 minutes.
Okay. The next question will be, please, how are we charged withholding tax? And also for business in the agricultural space, how do we position to benefit for the 5 years exemption? Is there a special registration to do?
Okay, so for agricultural businesses, all you need to do is to invest in the space, and you can claim your exemption when you are filing your tax returns. There's no special registration to do. You just state your nature of business and your category, you will get that exemption.
The next question will be, how many tax IDs are we meant to have? I noticed on my LIRS portal that I have a tax ID, a TIN, and a TIN, and on the NRS site, I also saw another tax ID when I put my NIN. Please shed more light on this.
Okay, so that's a provider. Yes. But you are supposed to have only one tax ID. So I believe that LIS is because there have been situations where people have reported that they have multiple IDs. And so I think LIS is in the process of merging those duplicates so that you have only one tax ID. So when that process is done, you're going to have only one tax ID, not two, not three, not four, and certainly not 36.
The next question, if we are to pay CIT of 30% on the company's total revenue, for example, I am into solar power system and generators installation and co. Clients pay me both for the products which I will have to buy on their behalf, and I will only be left with my service charges. How do I explain to the tax officers that all the revenue that came in is not my revenue as a limited company?
Okay, quickly, right?
Excuse me, sir. We can barely hear you.
Okay, is this better now?
Yes, it is. Thank
Okay,
you.
so imagine you have a business partner, right? Think about it. If you had a business partner, what explanation would that person give you for you to believe the person? Will word of mouth be enough? That's how you need to think about it. So you need to have documents, evidence to show that it can buy on their behalf and see my service charge. Now that I bought, right? So keep your turnover. It is it will make a loss. You will not pay any income tax. The 30% is that makes, right? And so if you need documentation, keep documentation. Remember, if you were a business partner, it won't just be word of mouth. You need documents. So apply that same thinking when you're dealing with the tax authorities. Thank you. Hello?
Sorry, I said you were breaking when you were answering the question. Please, can you come again?
Okay, so what I said is keep document to clearly explain how the person invoiced the customer and to show that all the money is not his money. You need evidence. You need to show invoices. I need evidence of the things that you bought on behalf of the customer. I hope that's clear.
Yes, it is. So the next question, I hear businesses that deal in farm produce are exempted from paying taxes.
Yes, there are some exemptions in the Nigerian Tax Act, so you need to visit the act and see all the categorizations of the different businesses that are exempted.
The next question, I have a business name registered and was not able to start up for about 5 years now, and it has TIN, but no file yet. Would the tax authority agree that there is no activity?
Okay, so in this instance, right, all you need to do is bring your bank statement to show that there is no activity. Sometimes they also ask you for a sworn affidavit to say, okay, there has been no activity. And with those two, they would also do their due diligence, check their systems to be sure that you're telling the truth. And once that checks out, you're fine. Thank you.
So it's already 12:40 now. We've exhausted the 6 minutes that we sectioned for the question and answer session. So we'll be bringing up our LIRS officials to speak more and shed more light on this tax or for all the questions you have about LIRS. So they'll be open to answer those questions.
All right, thank you very much. So what I also try to do is within the chat box, I'll type some of the responses while LRS speaks, and hopefully we can utilize that time in that space. Thank you very much.
Thank you. So we'll be calling on Mr. Femi to speak on behalf of LIRS. Mr. Femi, can you hear me?
Yes, I can hear you clearly.
Good afternoon, sir.
Yes, good afternoon, ma'am.
So a lot of people have questions and issues regarding their LIRS. So I'd just like for you to shed more light on that. Thank you.
Okay, thank you very much. And good afternoon, everyone on this call. I must say a very big thank you to the first speaker, Mr. Apaflo. He has done a very good job and laid a very big background to possibly what I should have spoken on. Nonetheless, we just want to highlight some few points that I believe will be very important for us to just look at. Just give me some few seconds to see what I can put together for us. It's just a second, please. I'll be with us shortly, please. Okay, so basically for LIRS, what is our most our concern here is, we have 4 different laws that have been passed into law. Can we all hear me, please? I just want to confirm that you can hear me. I just want to confirm if we can hear me clearly. Okay, thank you. So,
yes, we can.
On the part of LIRS, okay, so we know we have 4 laws that have been passed into law. We have the Nigerian Tax Act 2025, the Nigerian Tax Administration Act, and then the Joint Revenue Board Establishment Act and the Nigerian Revenue Service. So our focus majorly will be on the Nigerian Tax Act and the Nigerian Tax Administration Act. And what do we need to know as it is now? For business owners, for people in paid employment, we need to understand one basic thing. Number one is that we need to understand the basis to which we are assessed to tax. And when I say the basis, that is, we need to know whether you are a resident individual in Lagos State or not. We need to understand whether you are a resident individual or not. In line with that also, we need to understand what is chargeable to tax in your income. I listened to the first presentation that what we have, we know for taxes, we don't tax your revenue, we don't tax your capital. It is the profit that is derived from engaging in trading, in business, in profession or vocation. So whatever the profit is, that is what would be assessed to tax in your hand. Also, the second leg to that is that there is a new pay computation format. We now have a different relief entirely that is granted as opposed to what we used to have. And the third leg, which I will not dwell so much on, is on penalties when there are infractions on the provisions of the law. So let me just run through what I have. Number one, what do we assess to tax? What income is taxed and who is liable to that tax? Number one is, it is your business profit, which I've mentioned earlier. We assess to tax business profit. And how do you arrive at your business profit? Your business profit is arrived at when you look at all your sales, all the sales you have made in the course of the year. Then you look at certain expenses, because for you to have the profit, you must have carry out some activities. You must have paid some vendors. You must have paid salaries. You must have done advertisements. You must have paid rent where your office space is for those of us that have run some small scale enterprises. So when you have all of this, you take out those expenses from your sales or from your revenue. Whatever that is left is your profit. So now, this first speaker has mentioned to us that what the law looks at is the person. Now, who is a person as far as tax law is concerned? You can have a person as an individual, and you can also have a person as a company. A limited liability company is a distinct person that is separate from the owners of the business. But for small scale enterprises, if your entity is registered as a venture, maybe you have XYZ venture, or it is XYZ Enterprises or BBC Enterprises, all of these ones, they are not different from the owner. An enterprise is not different from the owner of the business. So what are we saying? The profit, the totality of the profit of that enterprises belongs to the owner of the business. Now, we need to also understand that as an enterprise does not pay tax. Enterprise is not subjected to tax, but it is the owner, the promoter of that enterprise, that will be assessed to tax. And I've just mentioned to us that we can derive that profit when we do a subtraction of the expense from the revenue. The remaining that is left as a profit is assessed to tax in the hand of that business owner. Another source of income is unemployment income. It is an employment income. And for the first time, this law has given us a definition to what employment is. And the definition that was given is so important that we pay attention to it. What does it say? It said that employment is an appointment into official position, whether public or otherwise, for which remuneration is payable. Now, I'm giving us this explanation and this definition because some of us as business owners, you will have some people that are working for you as employees. And the claim will be that this one is my contract staff. This one is my regular staff. Now, there is a problem there. By the time you look at your regular staff, you will assess the regular staff on the totality of the employment income you are giving that person, which you will remit to the state government. But for the person you call your contract staff, that one, you will only take a certain percentage, maybe like 5%. If you call the person a contract staff, 5% of the amount. Now, you have charged that person in the first instance a lesser amount compared to the person you employ directly. Now, what the law is saying here is, if you give that person remuneration on monthly basis, it does not form a basis for calling that person a contract staff. The person is purely under your employment, and you have an obligation as a small scale enterprise. Excuse me, please. As a small scale enterprise, to ensure that, having been appointed by government as an agent of deduction, to deduct the absolute and the exact amount of tax that is due from that person. So it is important that we take note of this so that we will not be subjected to an obligation that is not yours. Because the pay as you earn that you are deducting is not a burden on the company. It's not a burden on your enterprise. It is deducted from the salary that is due to that employee. And it says that it also went further to define what an employment income is. Or we say emolument. Emolument covers virtually everything you pay to your staff. Allowances, salaries and wages, bonuses, if you give them bonus, and the likes. Also, another source of income is if probably you have rental rental income, you have interest income, royalty income, you can have dividend, you can have commissions, you can have allowances, prizes, winnings, grants, awards, honorarium, and all the rest. You know, all of this income, all of this, and many more that are, because of want of time, I cannot list them. All of these are presumably to be assessed to tax. They are supposed to be charged to tax, except if the law says they should not be charged. And let me quickly say this to us as small-scale enterprise. As a small-scale enterprise, if what you pay your employee is a minimum wage or less, I'm going to repeat this. If what you pay your employee is a minimum wage or less, you are not supposed to deduct tax from that employee because minimum wage is exempted from tax. Now, what is the definition of minimum wage? It is 70,000 naira as at today. You know, different states, I know Lagos State, maybe Lagos State is paying, I think maybe 80,000 or 85,000, I'm not sure. You know, some states, they are paying 75,000. But what the national minimum wage is 70,000. And that's the basis you are going to use to determine whether that income is exempted or not. So when your income is minimum wage, that's the salary you pay to that staff is exempted from tax, from employment. Now, who do you charge? It is all of us on this call. As an individual, if your entity is not limited liability company. So who pays tax in Nigeria? Who pays tax? If you are a resident person in Nigeria, our basis of assessing an individual to tax is residency. And when we now look at some instances that you are not a resident, but you determine you earn income from Nigeria, it means you are a non-resident, and we assess you to tax on the portion of the income you derive from Nigeria. You'll be assessed to tax on that. So who is a resident person now? Now, I will not belabor us with what all that is, but for us, what we should take note of is that if, for example, you work in Lagos State and you live at Arepo incidentally is in Ogun State, you know, it means your taxes should go to Ogun State Internal Revenue Service. If you work in Lagos, it is not a function of where you work. It's where you pay your tax to as an individual is a function of where you reside. So if you work in Ogun State and you live in Lagos State, then your taxes should come to Lagos State. So if you have any of your employees that has short jurisdictions that stays in Lagos and work in Ogun, please remit your taxes to Lagos and vice versa. What do I need to say? Now, let me just move to this quickly. I don't know if benefit in kind will be applicable to us, but the law is saying that if there are benefits that is given to your employees, or there is certain benefit you enjoy that you are supposed to do yourself ordinarily, that will be taken as a benefit in kind in your hand. So for you in business, which I have mentioned, there's a flow chart to how you determine your profits. I've mentioned that. Deduction that is allowed, we allow it, and we take it out from your sales to have what your profit is. So ultimately, how do we now determine what our taxes should be? For people under your employment, if you have people under your employment, we need to get their chargeable income. How do we get their chargeable income? What that is telling us is that you don't assess to tax the totality of the employment income of an individual. If the employment income of an individual is 1 million naira, for example, we don't tax the 1 million. We need to grant reliefs first. We need to grant certain relief to those employees. Now, under this new law, there are 6 reliefs. There are 6 reliefs that should be granted. That is, we remove these 6 reliefs from the employment income. Whatever that is left is what we are going to apply our respective tax table on. So how do we do that? We now say, do you have National Housing Fund? National Housing Fund, do you have National Housing Fund? If you do, which is 2.5% of the basic salary, do you contribute that? You also have National Health Insurance Scheme, We also have pension contribution, and that portion is going to be what the employee contributes. You know, pension contribution is the employer will contribute and the employee will also contribute. Well, what the law will exempt, what the law will allow for the purpose of the benefit of the individual taxpayer is what? It is the portion that is contributed by the employee. And in standard form, it is 8% of the monthly emolument. That is what is written in the Act. Also, if any of your employee has interest on money borrowed for their occupied residence, or what we call mortgage interest, that is also an allowable deduction. What do we mean by that? Your employee got a loan to build his own house. He is going to pay the principal sum plus interest. The law is saying that the interest element should also be a deduction for the purpose of computing the tax of that individual. Also, we have life assurance premium or deferred annuity. If you do that, if any employee do that, is an exemption, is a deduction that is allowed. And lastly, we have rent relief. Rent relief, the law says that the rent relief is the 20% of the rent that is paid, or up to the maximum of 500,000 naira. It's either you use 500,000 if the 20% is more than 500,000, or you use 20% if the 20% is less than the 500,000. In any case, all of these 6 deductions, you must back them up with evidence. With evidence. All these deductions must be backed up with evidence. So also we have the tax table. It has changed. It starts with the first 800,000 is exempted from, is 0%. We have the 2.2 million that is 15, and on like that. Now, what is important for us to take note of as business owner, we must make sure that we avoid the penalties of the law. Now, what do you need to take note of? Number one, as a business owner, you must ensure that the amount, the correct amount of tax is deducted from the salaries of your staff. By law, the tax authority does not need to write to you to inform you this, that as an enterprise, as a business, you have been appointed as the agent of government to deduct the pay as you earn. And not just pay as you earn, if you have any withholding tax transactions, you should also deduct it. And the law now went for that to tell us who a small company is. Who a small company said, when your turnover is 100 million, or your fixed asset is what? Is around 250 million naira. So if you don't have a turnover up to 100 million, and you don't have fixed assets up to 250 million naira, then it means you are a small company, then you don't have obligation. You are exempted from performing that obligation. But what is important for us to take note of as we move on and as I conclude is that, number one, make sure that you have your tax ID. Now, currently, Lagos State, okay, before the new tax law, we have what is called, you will see the tax ID will give you, can give you a corporate ID, individual will give them their own individual ID, which the corporate ID will start with C, the individual ID will start with N. Now, for you to have that ID, if you don't have, please reach out to Lagos State Internal Revenue Service through our portal, LIRS, etax.lirs.net, etax.lirs.net. If you reach out to us through that platform, we'll be able to generate one for you. We'll request for certain information, as the case may be. For individual, we can request for your name, your date of birth, your NIN, or your BVN. Now, I understand when I say BVN, sometimes some people are skeptical about that. There is nothing we can do about the BVN. What we need your BVN or NIN for is because they are unique identity for you. No two persons can have the same BVN. We see it as a form of authentic numbering that is unique to you. So when you supply that, it will help us to know that this is the person we are dealing with, and we'll be able to generate your pay ID for you, request for your phone number, for your email, and all the rest. If it is for your business enterprise, we will have to request for your business name registration, the document that was given to you by Corporate Affairs Commission. So all of this will help us to generate your ID for you. Also, this is January. It is expected as an employer of labor, all the taxes you have deducted from your staff, you are to file annual returns. And the template for doing so is on our e-tax platform. And if there are challenges along the line, you can always reach out to us, to any of our tax stations that is spread across the state, and you can chat also through our chat box on the e-tax platform. Now, what do you need to also take note of as I conclude? Now, this time around, what this new tax law is telling all of us that are in business is to ensure that we don't joke with our compliance. It's just a matter of compliance. You have a lot of advantages to catch up on this new tax law. But if you fail in terms of compliance, it creates a lot of bottlenecks for your business. Now, what do you need to take note of? I know if you are so structured in your SME, you will have HR, you will have finance department. Now, even if you don't have that, please let me give you this simple template to work with. Make sure you have the detailed plan on how you employ anybody into your business. Have a detailed plan, a structured plan, that when I'm employing this person, I have this structure in place. This is what I'm going to do. I have to create a file. I have to create a portfolio. I have to create a unique identity for every of my employees. You should be able to properly define how you pay them their salaries. What do you give them? Don't just take it for granted that let me just take this person and let the person just come. No, have a plan in place. And if you have a structured HR department and finance department, make sure that your HR, while you are employing, you are setting the remuneration. You are defining what benefit that person will enjoy, so that you'll be able to know which one of those income is supposed to be subjected to tax. Because it is not all what benefit your employee enjoys that will be taxed. It is not all the benefits. For example, if you provide a protective clothing for your employees, if you're an SME that is into fish farming, you can provide boots for your employees, you can provide some lab coat for your employees. Those ones, if you provide for them, it will not be taxable. The cost you incur on that will be an allowable deduction for you, and you still not be taxed. But when you pay them salaries, when you give them bonuses, that will be taxed. For example, you can say that for you to be calling customers, I will give you telephone allowance. When you give them that telephone allowance is not supposed to be subjected to tax. So we need to properly itemize the components of the benefit of emolument you are giving to your staff. Then your finance team will be able to say, this one is taxable, this one will not be taxed. Then when all of this happens, you are safe on the part of compliance. Another thing you can do also is to ensure that you do regular review of those emoluments, so that you don't suffer tax, your employee does not suffer tax. Now, ultimately, another thing you need to also take note of is that when are we supposed to make these payments? For your payee, on or before the 10th of the following month. On or before the 10th of the following. If you deduct payee from your staff for January, for instance, now, today is 21st. If you have paid them salary and you deduct the tax from them, the law is saying that you can decide to make the payment today, but you must make sure that latest by February 10th, you must have made the payment. So all of these are key and important for us to take note of. Also, you need to also tell yourself and your employees in any case that you have a responsibility to also register for tax ID. Having registered, you also have a responsibility to also file your individual returns, notwithstanding that as an employer, you have filed returns on their behalf. And the filing time, although we have challenges with that, but the filing, which I will tell you, it should happen between now and 31st of March. There are certain issues around that, but it is safe that you file that return between now and 31st of March. So like I said, which I've listened to Mr. Apaflo, there are penalties and there are consequences when you don't follow some of these laws, and they are severe. And I don't expect that we'll wait for penalties to come our way, because penalties, they are what? Additional burden to every one of us. So on this note, let me just put a stop to my call. And thank you for having us on this call. Thank you very much.
Thank you very much, Mr. Femi, for giving insight on what feels confusing to everybody. I have a question for you in the chat box, and it reads as, so we can file our annual tax returns from the eTax portal.
Absolutely, absolutely. We don't even do any hard copy filing. Whatever you want to do, you want to file your return, yes. Not just filing of return. If you have an assessment, you want to make your payment, you can make payments through the eTax platform. If you have an assessment and you are dissatisfied, you are not happy with the assessment we have issued, you can object on the platform. So everything, our eTax platform is a platform you can interact with, and it will address all your tax concerns. Thank you.
Okay, thank you very much. Mr.
Wow, I can't hear you.
Mr. Apaflo, can you hear me?
Okay.
Yes, I can hear you. I'm with you.
Okay, so I have a question for you from the chat box. The question is directed to you. So if I am an employee in a private sector and I already have my tax ID, do I need to have another tax ID for my business enterprise incorporated for my side also?
Yes. Remember we said that your company is not from you as an so the company.
The network is very bad, Mr. Apaflo.
Can you hear me? Is it clear?
Oh, so yes, I can hear you now.
I said, so yes. To find is that clear? If it's not clear, I'll just type in the chat box.
Okay, so I think you should just type the answer in the chat box because we could not hear you.
Okay, okay. Can I just respond to that?
Oh, yes, sir.
Okay. So as an employee, I mentioned that in the course of my presentation also, that you will have your own tax ID. For example, in Lagos, you will see that your tax ID is N-something, right? That's your tax ID. But because you have side hustle, understand that as a business enterprise venture, that enterprise will not pay tax. But that venture will have a responsibility to deduct tax if you have some staff. So you will be registered. The registration you are doing is for accounting purposes alone. So that side also, that enterprise will have its own ID. And for Lagos, that ID will read C-something. C-some numbers. So you will have it, but it will not be, that does not translate to mean that business name will pay tax. It is you that you will see pay tax, but it is that C-something that is helping you to report and capture your tax transaction with Lagos State. So that enterprise will also have tax ID. Thank you.
Thank you very much, sir. So we have two people that have their hands raised. So I'm just going to give you 2 minutes to quickly ask your question so we can round up this session. So Mr. Oluwaseun Alabi, I've allowed you to speak, so you can mute. You can mute so you can speak now.
Okay, thank you very much. Good afternoon. Can you hear me?
Yes, we can hear you.
Okay, so I just have a few questions for clarifications, and then first of all, special thanks to all our facilitators for the great insight we've had. Okay, so as I was speaking, so I just needed to open my dashboard now. So and I find out that I was told to file a 3 years returns. And then, so I was just trying to understand that because I remember that the last one that was filed by my then company, that was around 2022 after I resigned. So after then, I'm not really sure I have engaged in any corporate engagement to get a salary job. So I want to understand what I need to do in that regards.
Okay, so Mr. Femi, I think that question is directed to you.
Okay. So, thank you, Mr. Shion, for that question. You know, it is not just that your employer is filing annual returns for all the staff, because what your employer would do at that time was to file for all employers, all of the employees, all you inclusive at that time. Now you left the organization. So my assumption here is you are now on your own, right? Now, I mentioned here that notwithstanding that your employer has filed return comprising all of the staff, it is now the responsibility of individual employees to go further than that, to file their own individual returns. So what is going to be your own individual returns? When you were with them, you would have extracted your employment income and file it for yourself because that's your own portion. So subsequent years, when you had left, whatever you do also that you derive profit from, you continue to file it on your own because that is now your own income as it were. So now, if you have not done that, maybe in the last 3 years for yourself, you still have the opportunity to do that. You can still file that return. It's just that, well, there should have been corresponding penalty for that. But for now, still go ahead and do your filings for the past 3 years. Look at the income you have earned in those periods and file the appropriate income. Thank you very much. I hope that answers your question.
Okay, thank you very much, Mr. Femi. So, Mr. Opeyemi, I've asked you, you can unmute now, so you can ask your question.
Yeah, good afternoon, sir. So my
Yes.
question is that I registered a business name like 5 years ago, and last year again I registered another limited liability company. But since I've registered these two, I've not actually, for some reasons, I've not started running the business and I've not earned anything on it, but it is registered. So the person that did the CAC registration for me contacted me last year and told me about annual revenue filing and told me I would have to pay for all the 5 years that I have defaulted. I was going to pay a penalty because what I was now charged was higher than what the normal annual revenue should be, what the normal fee should be. I was charged excess for defaulting all these 5 years. So my question is, for a business that has not even earned 1 naira, is it right that I'm having to pay annual returns on the both? Thank you.
Okay. So let me try and speak to that also. Now, it's a serious offense when you don't file return. And I'm going to join this response to this question I am looking at on the chat box. Somebody is asking for an enterprise that has payee that is not up to minimum wage. Are they still expected to file zero returns? Yes. Because your income is exempted from tax does not mean that you will not file return. So you will file return. What will just happen is that you file that return and we know that this income is exempted from tax, no tax is paid. Now, let me join that with your question. You see, in the event that even if you have registered a business, you have your certificate, you are supposed to approach what is now called the Nigerian Revenue Service to also register with them. Now, if you don't do any business, that does not mean that you are still not going to register. Sometimes you file a nil return. Your returns can carry zero because there is nothing. If there is no profit, there is no tax. If there is no profit, there is no tax. So the only offense here is that you did not file your return, you did not register with the relevant tax authority. Anytime you are registering, they will see that you have been incorporated for this long, and they will say that failure to register is also an offense, and which will attract a corresponding penalty. But what I would suggest is that you will pay tax. Like you said, you are only paying for the penalty of the offenses you have committed. But your book will also speak to what the entity is into, whether or not you are supposed to pay tax in any instance. And one thing that we do that is not so good, which I'm going to advise everyone, please don't have a business account and you receive all sorts of money into that account. Let your business account only receive your business income, your business sales, your business revenue. Somebody just wants to send money to you. It's not for the purpose of the business. Don't use the business account for that, because that's what the taxman is looking for. And some of us also, you now say today, narrate anything you want to send to me as gift, as loan. You can continue to narrate like that, but that does not mean that because you narrated it as such, it means that we are going to accept it. We are going to ask questions. Is that clear? But I can tell you that you can approach the Nigerian Revenue Service Office for more clarification on what to do, and you will be properly guided. Thank you very much.
Thank you, Mr. Femi. I hope that answers your question, Ms. Opeyemi. Mr. Sheung, you can unmute. Yes, you can unmute at your question.
Yeah, so thank you very much. So I think I have the same question with Opeyemi, so I think he had answered it. Yeah.
Okay, thank you. So I'm trying to see the other two people who have their hands raised. So if we've answered your question, please kindly lower your hand so that we can. Mr. Femi, your hands are raised. Okay.
Apologies, it's just an error.
Okay, so Mrs. Buki. All right, okay. So you've been asked to unmute, Ms. Buki. You can ask your question. Can you hear me? So, in the absence of no questions, thank you very much, Mr. Apaflo. Thank you, Mr. Femi. Thank you, Adeyinka, for coming to facilitate our session. It has been a very insightful one. We've learned a lot. We've unlearned and we've relearned in this session. And thank you for participating in our session today. Mr. Shim, do you still have any question?
Yes, so I just remembered that I wanted to ask Mr. Femi a question. So I want to ask, is there a specialized training for probably anyone who want to help anyone who wants to fight their tax? You know, I've seen a lot of people reaching out and like, oh, can you help me find my tax? Can you guide me on how? So is there probably a training for pressing like that?
Okay, what do I say? There's no specialized training for that. But what I can suggest is, depending on where that person is, if the person is close by around Ikeja, you can come to our head office. Wherever the person is, you can contact us. We can just give you a very close location to the person. Our tax stations are spread across. Walk in and they will be willing to assist on how to get the annual returns done.
Okay. Thank you then, sir. Thank you. Thank you, sir.
Oh, and also please remember that Mr. Apaflo is a certified tax consultant. So if you have any question, you can always reach out to Mr. Apaflo and then he will put you through. Mr. Apaflo, can you kindly put your information in the chat box so anybody that has any question can just reach out to you? Can you hear me?
Yeah, I can hear you. I mean, I can only send a message to the host and panelists. So I'll send to you and then maybe you just post to the general group chat.
Oh, all right. Thank you. Thank you very much for joining our session. Before this session ends, just to let you know that if you are a tech person, your business revolves around tech, LSETF is offering free workspace voucher. To get more information, you can check our Instagram page and just search for LSETF on Instagram, and then you get more information about the workspace voucher. And also, if you want to go back and watch this session, the session was streamed live on LinkedIn, Facebook, and YouTube, where you can search for LSETF on either of those social media accounts, and then you'll be getting the video of this session today. So thank you very much for joining our session once again. Would look forward to you attending our next session for next week, which also promises to be a very insightful session. So thank you very much and do have a wonderful day ahead. Yes, we have a recording and we'll share the recording via email after this session. So thank you very much for joining and do have a wonderful day.
All right, thank you.